So in this video, we revisit the class that I gave about 7 weeks ago, where I discussed the solar cycles, the solar minimum, the expected impending crash, and then the coupling of that to some type of military involvement. Here we are, 7-8 weeks later. The crash is following exactly along the way that we said that it would back in the video in our YouTube section here, a little further down in the section. What I'd like you to pay closest attention to is the structural analysis of the '08 crash in relation to this crash. We're now officially in bear territory. The word crash is being used, the word recession is being floated, so it's safe to sort of come out now and sort of plant a flag in the ground and lay claim to the fact that we said this was coming, we knew why it was coming, and now hopefully by the end of this video you'll understand what's next in the institutional playbook. Everything that we do is based on the idea that people in power don't make mistakes or have accidents. There's nothing random, so to speak. And you don't hear this discussed in the mainstream media. You don't hear it discussed in mainstream trading circles because it's hard to get your head around how they could do this, why they would do this. But in the end, the institutions, the large corporations, all end up profiting from these chaotic events, these moments in time where people are physiologically, psychologically susceptible to paranoia and fear. So if you really believe that all of this financial mayhem, all of these sell-offs is because of the coronavirus, then you probably shouldn't watch this video. Go back and watch the first one, and I'll put a link to it in the description below. If, however, you're in the majority of traders who believe that banks find ways to rig and manipulate markets to screw retail traders and consumers, then you should probably continue and watch this. If you have any questions about the analysis, there's a comment section below. Don't forget to like or subscribe, and let me know what you think about this. I appreciate you guys. Thanks again. So a few months ago, I produced a video on our YouTube channel entitled Market Crash. And I got all sorts of comments back from it. I say all sorts, like a handful, if I'm being honest. And the handful of comments essentially said, there's no way. There's no way what you've said will happen. I said, okay. And I used the theory that we've developed force from market resonance, market vibration, to predict what's unfolding in front of us right now. And so what I'd like to do is sort of walk us through where the similarities are and pay attention to what's actually taking place. And so the wonderful part about all of this is that we knew it was coming. Now the question is, how do we learn from what took place in relation to the playbooks of the bank? So what I'm going to do is I'm going to point out some structural similarities. And those of you that are in the Skype training room for the Force Jedi Temple, I'm going to be watching you guys for questions and responses, and I'm going to be watching the Pro Room for responses too. So you guys, Greg, Juan, John, PJ, Robert, feel free to chime in here too. We're all in the same class right now. What I want you to notice are
some structural similarities between the '08 crash and what's happening right now, what was predicted. So number one, I want you to see there was an exuberant parabolic straight push up at one point. Okay. And now over here, I want you to see that same parabolic straight push up. You see those legs right there where the market was just on a tear? Okay. So number one, structurally, there was a parabolic, two-leg parabolic, a double leg retracementless wave, two waves right here. So we'll use letters. And I went through all of this in the YouTube video. It's funny watching people act surprised right now. I predicted there'd be a war. I'm still not sure that we're not outside of that. I think that's totally on the table right now. But the premise of the video was that we are cyclically adverse to fear and paranoia. And so that's what we're experiencing right now. And I'm not entirely convinced that the banks didn't use the coronavirus scare as a way to offload their positions in this and will get a bailout package very similar to what they got in '08, but they'll blame it on the pandemic as opposed to their greed. Okay, so tinfoil hat off. I want to show you the next two structural similarities. Double top with a higher high. Double top with a higher high. So we'll call those C and D. C and D. Do the same thing over here. C and D. Okay, everybody good so far? Okay, good. Now, when I do these analyses, I focus a lot on the structures of the moves. There's two things I focus on: the visible structure and the timing of it all. So this one happened October 10th. October 10th, we didn't have that over here. This one happened basically February 10th. October, November, December, January, February. So there's a four month shift. Plus 4 months. Okay. February 3rd. August 3rd. August, September, October, November, December. Yeah, so we're right in that 4-month pocket. Okay, this whole crazy thing ends. The bottom of it was March in the '08 crisis, March 5th, March, April, May, June, July. So the bottom of this, I'm saying July into August is when we finally start to pull around. We're in the very beginning of this move here, guys. Okay. Is this technique making sense so far? Okay. I'm going to keep pushing. Some of this is stream of consciousness because I honestly think as I'm doing it, so now how far do we go? Well, that's going to require a little bit of measurement. And we have this wonderful tool. So I'm going to take the top on the green line, the bottom on the red line. And we've gone 1, 2, 3, 4, 500% down. So if I measure this last dive right here, if I measure the retest in 08 at 100%, this is 200, 300, 400, and 500. Force guys, you recognize those lines. We use them all the time. Okay, pro room guys, probably not so much. So I'm going to bring those over into here. And we're going to do the same thing. Approximately right there. So in our case, we're going 1, 2, 3, 4, 5. 5 of those. We're not very far from, are we? We're at 2475, essentially, round numbering. Now, while we're here, I'm going to pull this out so you can see what the reactions are at these force lines that we're dealing with. And what I'd like to do is just sort of draw your attention, PJ, to the reactions at the levels when we get to them, these different lines, and how the touches are occurring at these kind of critical areas. We're about to open up on one right here. So we're sort of working our way down into that area now. If it goes lower than this, and I predicted in the video the crash would be bigger, it's an entirely different possibility. We're going at least down to 2475 based on that 500% analysis. July, August. All right, now what I want to show you next are the waves or the structures of these moves. Because again, markets, history, politics, history always repeats. And so now we get to play with the lines back at the structure of it all. And for this, I'm going to use a different color line. We'll make it yellow. Matter of fact, we'll make it default so we can do the same thing. So check this out. You have the double, the drop, and then the pullback. So over here, let's see if that's taking place. This. That would have been here. So we're missing this leg. December. Am I skewed? I don't think I'm skewed. Hang on. Unless this is that. What do you think, Tom? What makes sense about this? If I measure out the time, yeah, son of a gun, that's it. Okay, so on this side, I'm using fib extensions where this is 100%, and then I take 100% on the other side of the double top, and then Tom, I measure it out. And can you guys see where the red line intersects? So 33%, 66%, 100%, 33%, 66%. So at the 166 line, we have this wave right here. Over here at the 166 line, Tom, is the capitulation. John, you see that? Red, green, red, green. Yeah, now this is where this gets interesting. Because you guys know where I'm going with this already. Green, red, green, red. Green, red. Green. Okay, so now over here, red, green, red, green, red, green. We're just applying force signals to this. Okay, so E was the 166. F is the next line, or let's call it E1, just because it's fun to use letters and numbers. And E1 was the second push. You'll notice, guys, that there was a consolidation right here. You see, Tom, how it hesitates for a few days and then it pulls down? There's a block of candles right there. Block. And so now over here on our other chart, E1 is right there, and there's a block. It is abbreviated. It's not as long, but Tom, structurally, we have that. Everybody with me so far? I don't want to leave anyone behind today. This is too important. Now, E1 is the beginning of no bueno. Meaning, if you take the height of this section right here, let's just look at the candles, right? Geometry gives us insight into intention. So I'm going to take this block right here. And now I'm going to use that same ladder that we used to measure percent-wise how far down this block went. So I'll pull this down this way. So top of the candle bodies themselves, bottom of the candle bodies, 200, 300, 400, 500, 600, 700% down to that bottom wick. 700% down to the bottom wick. So Tom, if I take those candles here, I'm going to look for 700% down. Using the candle bodies as a guide. Okay. That look about right? So here's 100%. 2, 3, 4, 5, 6, 7 is 1700. Drawing tools, drawing objects. So as of right now, let's use a little force love on this. We hit that. Once we break it, 1, 2, 3, 4 days. The next 4 days are hellacious, according to this. I don't know if that's going to happen or not. I'm just looking at what's happened in the past. Those of you in the force room, I want you to notice this really quick while I got you, okay? Do you recognize that as a pattern 5 over here? This is a pattern 4 with a trend continuation signal. Right there. This is a regular pattern 1. And this is a regular pattern 2. So Tom, this was a pattern 4 that's occurring the exact same way. We have a lower low. The next candle up, Tom, wasn't the lower low. And now we have the penetration or the trend continuation of the pattern 4. So E1 matches up. Those of you who have no idea what a pattern 4 is, this is a girl I listen to, by the way, on YouTube. If you guys ever want to check out a really cool bass player, she's pretty too, but the music is unbelievable. You go to, here, we'll even play it while we're doing this. Dropbox. We'll go over here. I'm ready. All right, so on this chart, I'm gonna, okay, can you see where, let me know when this comes up on the chart where it says pattern 4. All right, so do you see how it pulls down into the red signal? The expectation is a dwell, and then PJ in the very next page, do you see where it says trend continuation? Okay, so if you apply that to what took place in 2008 and what's taking place right now at this subsection of the pattern, it's 100% of the leg that drove into the pattern 4. Right here. See that leg? We'll give it a different color. How about aqua? Yeah, that girl's got about a dozen videos where she plays the hardest bass lines for some of the most funky songs you've ever hit in Jamiroquai, Earth, Wind, and Fire. It just nails these bass lines. Anyway, so there's 100%. Now, Tom, watch. If I take that line, you see what happens when I put it underneath right there? It's just like the video, just like the book that I give you knuckleheads to read. A lot of you read it. You're not all knuckleheads. Some of you are, though. So over here, E to E1, PJ, is the equivalent line. So from here to here, that was the pattern 4 low. We'll use the cyan on this side. And now, Tom, look. Here's 100% of the breakout. So the low is 2213 if we use the fib continuation or the pattern 4 continuation with 100% of the extension. And getting there by, it took 1 to 3 days to get to the low. Sorry, 1, 2, 3, 4 days to get to the low, which means 1 control paste, 2, 3, 4 days. Well, no. 1, 2, 3, 4 to get to here. And then there's a pullback. So we're at 184 or 1700 in the next 4 days. Again, 2180 to 1700, depending on which analysis kicks in. But either way, it's 4 days from now. And then we're gonna, wherever we are at that first big wick low, when we get to that first big wick low, which is coming, that's gonna mark the bottom. You can see then we come into the retest of the E1 pattern. The retest of the E1 pattern, which is right here, becomes critically important moving forward based on the 07 playbook. That channel kicks in at that point, and we actually come back and revisit it. That's as much as I can do with this right now. I'm actually going to save this workspace. So we don't lose these drawings. Here we go. Workspace, save. And I'll put this recording up on our YouTube channel, but I was basically begging people to watch that coming into this as we were going higher and higher and higher and higher. And now that playbook, they're doing the same thing to everybody. They're doing the same thing to everybody again. It's all playing out. So if you have longer term investments, if you have the ability to swing trade or position trade or hold these positions longer, I think you can benefit from this a lot because they're telling you what they're doing. They're not very creative when it comes to this stuff. So let me get you guys a copy of the workspace so you can play with these lines if you want today. So how do I do that? I'm going to go to the Dropbox. Your order has been placed. And let's upload the file. Those of you that are not Force customers, you're in the Pro Room. You're going to see signals from. You're not going to see any Force signals on most of the chart, but you'll recognize your Pro Room charts. Documents, NinjaTrader 8, Workspaces, Force, Jedi Temple. So if you don't have the Force software, you're not going to see stuff on a bunch of charts, but you will see my marked up chart lines here. Share, copy link. Okay, we'll put it in the Skype room too. And over here, there we go. Skype. Here we go. Everybody got that? It's kind of fun because they on TV they're going to talk about how there's no way we can predict what's going to happen. Everything is up in the air, so on and so forth. And you and I are going to be sitting here going, yeah, now you're going to do this. Now you're going to do that. Now you're going to do this. And your neighbor will say, well, how did you know today was going to be a rally? Do you have magical powers? Are you a wizard? No, I just use math. But can you see here how the virus had nothing to do with what's happening right now? The virus is a catalyst that promotes fear, anxiety, right? Panic. When those things are happening, you can do stuff when nobody's looking. You can pump billions of dollars to your friends every night in the repo market. Have you guys been following what's been happening? It used to be a bailout, but now everyone's looking for that. And if you come up here, Fed boosts money and it's providing to banks. To who? To who? To who? To who? To banks in overnight repo lending to $175 billion. Up sizes again how much money it will lend. Who? Middle Americans. How much money it will lend. Who? Small business owners. It was bumping up the maximum size of its overnight repurchase agreements. Increase the limit, $25 billion. They're doing it at night. It's no different than what was happening here. On this chart, bubble A. In this chart, bubble B. This chart, guess what? Previous solar cycle minimum. This chart, present solar cycle minimum. If you want to learn more about this, when you're done listening to the bass player, you can go on our video page and you will see a thumbnail right here. Solar cycle 24, we are here. Drones in the next recession. There is no difference. I'll put a link to the video if you want to watch it here today. It's only 40 minutes long. It's not ridiculous. It's a good use of your time today. If for nothing else as a primer, to remember what is happening and why it's happening. So in conjunction between that video and your, oh my God. Yeah, we're not even close here, monkeys, my evil monkeys. So if we just kind of sketch in here structurally using then we've got this here, and we've got this. And then Tom, we've got this. No, it can't be that. That's Armageddon, man. But, okay. But then again, that's nervous laughter, by the way. But can you see the waves?
Order filled.
You can see what's going on here with the waves. Almost anticipating where the next puncture is going to be, where the next pulls will be, so on and so forth. So the retest of the bottom comes in right here. That's the next pattern 4, Tom. And then Kurt, the retest of the bottom is over here. If you want to draw that on your charts. Holy shnikes. If it's even a little right, this should give you some guidance into what they're doing now.